all our colleagues in the United States, India, and elsewhere for joining. This is tremendously exciting. I'm not sure if it's clear to all of our members, but today we are launching a quarterly emerging technology series with the Koan Advisory Group. And so today we're talking about cryptocurrencies, but in the future, we're going to bring other important advanced technologies to the table. The idea is to talk about these technologies not only in and amongst themselves, but how they impact both the bilateral corridor and impact, of course, the international digital economy writ large. Today's conversation is being recorded. Just a little upfront nuts and bolts. We ask that only the speakers stay on video, and we ask that others mute as well until later on we're going to have a question and answer period. During the question and answer period, if you would like to ask a question, you can either raise your hand and we'll call on you. You can type it in the chat as well. And of course, I always encourage our panelists to also interact as well amongst themselves. So with that, I'm going to hand over the microphone to our moderator, Vivan Sharon, who leads the Koan Advisory Group and is one of our members that has a really strong understanding and capacity to engage on advanced technologies. And Vivan, I want to thank you, and I'm really excited here today to have you lead this conversation. So with that, I'm handing the microphone over to you and going on mute and off camera. It's over to you, sir.
Thank you, Jay. Really excited to be doing this with you, and hopefully as we build this series, we take some of the people along for the journey, and we can string together conversations, because what we see in the tech space in India is, and I guess across the world, is a lot of cross-cutting issues impacting different segments of tech markets. And crypto is no different. Many of us swung into action in the crypto policy front only about last year in India, and we see that there are many similarities and overlaps with the kinds of issues we face in other segments of the digital market in India. So with that, and also, I guess, an overarching context for those of you who have not followed the crypto space here as keenly as some of us may have, India is well on its way to some sort of a formal recognition to crypto as an asset class. What the eventual formulation will be, we don't know. All of us are engaging in this debate, and I think there is a lot of cross-pollination across borders. And why we've themed this similarly, the theme is crossing borders today, because some of the most challenging and most interesting questions in this crypto governance sphere really stem from its international dimensions. Those of us who engage with regulators on this are also aware that, in an ideal world, there would be a coordinated regulatory view across democratic markets on the governance of assets like these that now account for anywhere between 2 to 3 trillion in market cap as compared to about 100 trillion of overall assets under management. So the IMF in December or November last year reiterated the view, or first iterated the view from an international organization standpoint, that international collaboration and a coordinated approach is ideal, but we know that we work on multiple speed economies, and the policy setups and institutional architectures are messy. The US is no different. With the executive order Biden has just issued about a week ago or 2 weeks ago, which I hope the first speaker, Bill Hulse, will sort of give us an overview of. The US is trying to now create a cogent framework for itself. But for that, it has to pull together multiple pieces and agencies. So Bill, I think without further ado, if I can turn to you as a natural segue from these sort of opening remarks, it seems really messy to me sitting here in India, trying to imagine how the FTC, SEC, CFTC, federal banking agencies, various other sort of line ministries, agencies, etc., will coordinate on a cogent crypto agenda for the US. We are watching that space very closely because obviously, since this is uncharted territory as far as governance developments are concerned, we will be informed by a lot of what the US does. So just wanted to get your 40,000 feet view on the general state of crypto regulations in the US, and more specifically, how do you see this sort of whole of government approach that Biden wants to implement in the US actually playing out?
Thanks, Ivan. I'm really happy to be here today and share the kind of the U.S. Chamber of Commerce perspective on these issues, but also to participate in what is a global conversation here in terms of making sure that we have appropriate regulatory infrastructure in place that is well coordinated and allows for cross-border economic activity. So here at the Center for Capital Markets Competitiveness at the U.S. Chamber of Commerce, my responsibility is overseeing all of our work as it relates to financial regulatory policy, but also I'm specifically focused on our work that it relates to digital assets. So about a year and a half, maybe 2 years ago, we formed a digital assets working group. This group includes dozens of companies that are interested in the digital assets ecosystems, banks, payments companies, asset managers, exchanges. And working with this group, we published a report last spring titled Digital Assets, a framework for regulation to maintain the United States status as an innovation leader, which includes dozens of recommendations for promoting innovation in the digital asset space, and is shaped by themes we identified after speaking with countless firms operating in the US marketplace. I'll say since then, there's been a significant increase in the desire of US policymakers to modernize our regulatory structure, especially over just the last few months. Last October, the US Treasury Department released a report with recommendations for the regulation of stablecoins. Just 2 weeks ago, President Biden signed a pretty expansive executive order that plan to talk about more today. And then finally, there seems to be some bipartisan consensus growing in Congress on the need for legislation to act. Action by policymakers has the potential to alleviate much of the regulatory uncertainty that innovators face in this space, but it also opens the door to some new regulatory risks, even from policymakers who have positive intentions for encouraging the development of digital assets. There's no single law or regulation that can be updated to address the regulatory uncertainty. The reality is almost every facet of our financial regulatory system implicates these assets, from investor protection to prudential policy and financial stability to consumer protection, not to mention the number of other regulators that have an interest in this space, including on policy issues such as privacy or even climate change, as discussed in the executive order. The industry in the US has invested heavily in educating policymakers about the myriad of regulatory issues and offered advice on how they should be addressed. I would say now the primary question is confronting Washington is to the level of political will for regulatory agencies and for Congress to act, now that we have an appreciation of the issues that are in front of us, or the appreciation of the issues that the business industry and the industry has in front of them. Ivan, would you like me to talk a little bit more about the executive order, or follow that with later discussion?
We'll do a round and we'll come back to that. But thank you for that overview. And I guess political will is the secret sauce that's going to bring this all together across the world. But if I can turn to Meghna, who is a fellow at the Asia Center, which is a think tank based here and has done a lot of work in this space. Meghna, as I mentioned, some of the deepest questions are around international collaboration. And let me be specific now. India has a managed foreign exchange account. Both capital and current accounts are managed to different degrees. This is something, of course, that we can debate also with Bhargavi, who's written extensively on the topic. But that differentiates India fundamentally from some of the more advanced jurisdictions where we see a sliver of crypto governance protocols, institutional frameworks, regulations being put in place. So, first and foremost, how do we understand the intersection between foreign exchange management in India and the questions around crypto? What are the questions? What is the intersection? If we can unpack that, and then briefly, if you can also comment on the other major international dimension, which is money laundering, which many enforcement authorities in India are concerned with. And in India, we have a pretty hawkish view coming out of the various enforcement agencies that are looking at issues around money laundering, around terror financing, and so on, as far as crypto is concerned. So just also that intersection, how does it play out in India? Are there ways to address it? Just some early remarks from you on all of this, please.
Sure. The laws governing capital controls in India are quite convoluted, so I will try my best to do justice to explaining them. Essentially, what the primary act that deals with this is FEMA, which is Foreign Exchange Management Act, and its objective or the underlying objective is to avoid a balance of payment crisis. So capital controls in India differ according to the type of investor, the markets operated in, and the assets bought or sold. FEMA specifically deals with capital and current account transactions. And the primary difference between these two is that with a capital account transaction, there is some change of your assets or liabilities if you're a resident Indian, if your assets or liabilities abroad, and vice versa for non-residents. Thus, if I'm sitting in America and I buy a house in India, that's a capital account transaction. FEMA doesn't expressly deal with crypto, but because there is the possibility of assets and a transfer of value across borders, enforcement agencies are investigating whether it has been violated. Now we know that Indian tax law classifies crypto as a type of property, and judicial decisions have further clarified that they are a form of intangible movable property. FEMA deals with broadly three types of movable intangible property: IPR, securities and commodities, and currency. While crypto is classified under these different or as these different asset classes abroad, such as in the US, where FinCEN has deemed it a convertible virtual currency. The SEC has said that it is a security, or certain crypto assets are securities, not Bitcoin and Ether. And the CFTC treats it as a commodity. The purchase of such assets from a US exchange could technically qualify as a capital account transaction. The problem is the way it is defined in India doesn't align with the definition abroad. So crypto would not qualify as a security or a commodity or currency in India unless the RBI issues a specific notification to this effect. FEMA also permits the import of goods, which can also include software. Crypto can technically, as we know, qualify as software, but here the Enforcement Directorate will argue that the import of crypto, say for trading, doesn't fit the purpose for the import of software. So there's a misalignment there. But there is chatter that crypto may be classified as a good for the purpose of goods and services taxes, and classifying it as such under FEMA and GST would reduce, but not altogether remove, the friction in bringing in new types of crypto technology into the country.
Okay, so Meghna, I'm going to stop you right there because you've said a lot of stuff, which is very dense.
Yeah.
No, but I just want to take maybe a few steps back and bring in Bhargavi. Bhargavi, I hope you're with us now. Just to take off from where Meghna left off. Bhargavi, are you with us?
Sure. Can you hear me?
Yeah. So Bhargavi,
Okay,
I think we need to familiarize the audience here a little bit more with why exactly India has a capital account or a forex account management framework in place. What is the objective? What is the historical context here? And therefore, what are the kind of first principles or lessons that we can take from the historical reasons for why FEMA exists and now possibly interplays with some of the questions around crypto, as Meghna mentioned?
sure. Thanks, Ivan. Hi, everyone. So, all right. So I was going to begin with the example of Argentina, but, since we are on India right now, let me begin with India, and Vivan specifically raised India. And I'll tell you why I thought Argentina is actually a perfect example a little bit later. if I get time. So, all right. So I think the history of India is not very different from the history of most emerging market countries, which is that until the 90s, most developing countries actually had a closed capital account. And in fact, it was only in the late 80s and 90s that countries started opening up their trade barriers, number one, lower trade barriers, and number two, started realizing the benefits of bringing in global capital flows, etc. Right? So India had a very, very stringent foreign exchange regulation law until the 90s, where any transfer of foreign exchange, whether on the current account or capital account, in violation of the law was actually a criminal offense. So historically, we have actually seen India being extremely conservative on this front. In the 90s, like all other developing countries, India also opened up its current and capital account, in fact, in response to a balance of payment crisis. And the law was revised and current account became virtually fully convertible, at least legally speaking. But capital account continued to remain partially convertible. What do I mean by that? I mean that, like Meghna mentioned, right? If I'm making a transaction and buying foreign currency to buy shares in the United States, then the extent to which I can actually make that transaction, what are the limits, what kind of securities can I invest in, is regulated by the law. Similarly, if Bill or I don't know, an American company, whatever, a foreign company wants to invest in India, there are caps on how much investment can happen and so on and so forth. All right. Now, what is the economic rationale for capital controls in today's day and age? Frankly, there is only one economic rationale, right, which over time has kind of held academic sway. And that is financial stability, all right, which is that when countries undertake when firms in India, for example, take on a lot of foreign exchange debt, and then due to adverse currency movement, the foreign exchange debt ends up ballooning on the balance sheets of Indian firms. If this foreign exchange debt is unhedged, then it can lead to a financial stability crisis in India. So I wouldn't call it so much. The objective of FEMA, frankly, it's over and above what the economic rationale is, right? One is, okay, we love FDI, we like long-term foreign investment in India. So there is no economic rationale for having caps and that is a political story, frankly. But when it comes to debt, we are worried that excessive foreign debt on the balance sheet of Indian firms, which is unhedged, and there are adverse currency movements, the foreign exchange debt will balloon, Indian firms will go into bankruptcy, and they will start defaulting on Indian financial institutions, on their workers, etc. And that really precipitates what was essentially a currency crisis into a financial stability crisis for India. And that is, simply put, the worry, the economic rationale for FEMA or for capital controls. Now, how should we think about capital controls in the context of cryptocurrency? So here I want to take a step back, okay? I want to move away from India. And let's just start with what does the theory and evidence so far suggest, right? And the theory and evidence on the connection between capital controls and cryptocurrency is a bit like a paradox. Countries that have capital controls have in fact witnessed a higher uptake in cryptocurrencies. All right. So over time, to the extent that evidence is available on this, since it's a relatively new asset class, what academic researchers have found is that countries in which economic freedoms are lesser, even retail investors have shown a higher interest in taking to cryptocurrency. And that seems intuitive, right? So for example, if I am, a part of Argentina, if I'm a citizen of Argentina, or I'm a business in Venezuela, or I'm a business in Iran, and either due to sanctions or due to financial repression or due to excessive inflation, I don't trust my own currency, it seems intuitive that I'll start doing business in cryptocurrencies. Right? Because it saves the value of my currency, and it doesn't go through the bank rails, which means that I have relatively more freedom to transact. Just give me 2 more minutes and then. Now that creates a paradox for countries like India, which have capital controls. That should we extend the capital controls regime to cryptocurrencies, because that is actually encouraging people to adopt cryptocurrencies, which I'm not sure policymakers want? Or should we do away with capital controls so far as concerns cryptocurrencies? And we just limit capital controls to the real economic rationale, which is financial stability through excessive currency movement and leading in, excessive forex debt in Indian firms. I'll leave it at that. But this is really the paradox of countries with capital controls, whether to adopt or not to adopt cryptocurrency, whether to extend capital controls to cryptocurrency payments or not.
That's all very interesting, Bhargavi. I think we can spend hours talking about India's capital controls and economic ideology. But before going any further down that track, I want to bring it back now to the private sector with Sudipta, who is who represents PayU. And one of the industry implications, Sudipta, that's fairly obvious to most observers of the new financial technologies around us, is that fintech all of a sudden looks pretty old. Fintech is almost referred to in antiquated terms in the DeFi community, the decentralized finance community, or even some of the newer, fintech guys who are doing very niche things. And the RBI is looking at this whole buy now, pay later, and all of these new paradigms in fintech. So what does the traditional fintech, if I can call any company that has only existed for a couple of decades, what does a traditional fintech major like you do to survive? And is it do you look at these trends as complementary, or do you look at it as a competition? Do you seek to co-opt or compete? So over to you, Sudipta.
Hey, thanks, Vivan. I think it's definitely co-opt and cooperate, right? Because if I compare what is typically referred as Web 1.0, and then if you refer to the fintech as Web 2.0, and all these crypto exchanges or DeFi companies at Web 3.0, right? There is a linkage across all the three, right? So even if one needs to invest in any digital virtual asset, there is the dependency where one needs to convert the fiat, right, into digital virtual assets, right? So there is, and every exchange, if you see, knocks onto the doors of fintechs in order to enable the rails to accept fiat. And if you look at what fintechs also need to depend on is the banks, right? So to answer your question, there is definitely a co-op kind of a model, no competition as such. So that is, so there are two aspects, right? One is on the investment part, right? How do you enable the conversion from a fiat to a virtual asset? The other aspect which Bhargavi also touched upon is, how do you enable, or how do you enable merchants to accept, assets like these, right? So if you look at companies or fintechs, they have been adding on or partnering with Web3 companies so that you can add crypto payment options. I think eBay did that. So all of these companies, if you see, they started maybe 5-6 years back, they stopped it in between, and they have started again, right? So if you remember, eBay back in 2014, I believe, they announced that they'll accept crypto. They stopped it. And again, I think on 10th of March, they announced that, hey, they're going to accept crypto payment options again, right? Similarly, if you look at Stripe, right, they never supported crypto exchanges for the last 2-3 years. They stopped it in 2018. But I think again in March, they are looking at supporting crypto exchanges, right? And it's a matter of time where crypto as a payment method will also be offered, right? So there is a back and forth that is happening, but ultimately it's just a matter of time when payment fintech companies, as you referred, will support companies, Web 3.0 companies, as well as traditional merchants to accept payments.
Thank you. Bill, if I can turn it back to you now. Sorry for doing this in a linear way. It's just easier. But coming back to you on your question or proposition around political will, um, there are certain timelines that the executive order details. And it seems like there is therefore political desire to get some answers in 180 days, 120 days, and so on. But can you just sort of outline the contours of the executive order a little better, particularly from the international dimensions of it? Because I know that it has alluded to cooperation across borders too. And so any dimensions that you think are relevant from the standpoint of the discussion we've had today would be appreciated.
Yeah, absolutely. So as you mentioned, President Biden issued an executive order on March 9th entitled Ensuring Responsible Development of Digital Assets. And I think it's notable primarily because for this first time, it identifies digital assets policy as a national priority, wherein we had talked about in many different forums, but here we've identified it as a national priority. The EO, or the executive order, excuse me, begins by describing a national policy for digital assets across 6 priority areas: consumer and investor protection, financial stability, illicit finance, need for reinforcing U.S. leadership in the global financial system, financial inclusion, and responsible innovation. It directs various agencies ranging from the independent financial regulators to the EPA and the Department of Homeland Security to issue a series of about 10 reports with recommendations for how the U.S. should develop a coordinated strategy across the federal government for regulating digital assets. In my view, the broad scope of this executive order will have one of 2 outcomes. It will achieve the national sort of strategy it's striving for, or there is a risk that, that I'm a little bit concerned about, that it will collapse under its own weight, given it has extremely ambitious objectives under a relatively short time frame. Proposes including a number of agencies in this process without, significant expertise in these issues, that really could make it so that it doesn't produce kind of the real thought leadership and policy recommendations that we hope it does or that it espouses. That being said, we're going to remain optimistic, and that we'll hope that these reports will include some fresh and insightful views for updating our regulations here in the U.S., especially the financial agencies. As it relates to international coordination and cooperation, the Treasury Department's going to have a very significant role here. And based on my conversations with the Treasury Department and based on especially with their international team over there, they're very heavily involved in this report. And they see this as a great opportunity for one, to learn from other regions, but 2, to ensure that the work that is being done in the U.S. is understood in other regions, so that we can have more of a global framework. I think they see it as an opportunity to educate some other countries about the asset class, especially in some countries that are taking some more risks. For example, for adopting it as their fiat currency, which may have some promise, but also in some cases may not be as productive as they had hoped. And then finally, too, they'll coordinate not just from a bilateral standpoint, but coordinate through international standard-setting bodies such as the Financial Stability Board, et cetera.
Thank you, Bill. Just a quick follow-up on that. Are there any analogies to such an effort, in a concentrated way in the financial sector in the U.S., which compare well with the kind of objectives of this? Because you're really building something from the ground up, and the financial sector is already so complex in the U.S. How hopeful are you that in the next year and a half we have some semblance of an institutional framework which goes beyond subordinate legislation?
Got it. Yeah, I think there are comparable examples, at least in terms of an all-of-effort approach to address an issue, even including those that address the financial sector. In the previous administration, there was a number of executive orders issued with a desire to, I would say, tailor some of the regulations that we'd instituted following the financial crisis. More recently, under the Biden administration, they issued an executive order that urges the financial agencies to address climate-related financial risk, and much of that work is ongoing. But here, you're right. It's a little bit unique in that we have a new asset class, and that there isn't just one law or regulation that can be updated to address the asset class. When I get the question of, how is the chamber working on a crypto policy, and I say, well, which part of it? The SEC, CFTC, Fed, OCC, FDIC, those are our 5 independent financial regulators, but it actually includes a number of other issues as well, like we talked about illicit finance. And so, I think if there's one thing we hope this executive order produces is a better sense of prioritization of these issues. But I also think there's an understanding too that Congress is going to need to act here. And there has been some interest from Congress in acting for a while now. There's a growing bipartisan consensus in Congress to address the regulation of stable coins, which there are some financial stability questions around. There are some that would like to see that bill just go through, given there's bipartisan consensus. But there's also a possibility that that bill would be a broader bill that'll address many of these other issues. Not to mention some of these other issues have been discussed in Congress for years. The question of whether or not a cryptocurrency was a security was brought to the attention of Congress when I was working there 5 years ago. So it's not like we haven't been thinking about these things, but I think the political will is finally growing to address it.
Meghna, if I can take on from there, this theme of political will, it's a strange beast, this political will in India, because, sometimes it's mobilized through, or quite often it's mobilized through negative attention to an issue or an adverse event, more often than, in fact, perhaps constructive, build-ups to exercise a leadership position in some sort of tech governance sphere. And I see crypto discussions evolving in a similar way. If you look at discussions in Parliament in India, there are lots of concerns. One of the concerns is, of course, that a lot of low-income people have speculated in the asset class. But the other concern, which is really something that we keep hearing, is, like I said in the previous round, via the enforcement agencies that are looking at money laundering and terror financing and all sorts of very grave illegal activities. So is there a sort of solution for that? And also from an international standpoint, what are some of the key things that are being done, whether in the space of exchanges that are centralized or otherwise, to really regulate these flows of money that may sometimes be illegal or illicit?
Right. So I think this has been covered by a lot of academic research and non-academic research, but most crypto is effectively traceable. It's just a matter of identifying who is behind the wallet address, and many efforts are being undertaken both in India and globally that are towards achieving a situation where all wallet addresses have some kind of real world identity pegged to them. You have forensic tools now that are quite advanced that many governments and agencies are using, particularly in the US. They've had a lot of success with unearthing financial crimes related to crypto and even recovering some of those amounts. And in India, it's actually really easily done in terms of regularizing the crypto market and bringing it within the fold of anti-money laundering regulations. Essentially, what you need to do is you need to designate all crypto asset service providers as reporting entities under the Prevention of Money Laundering Act. And even real estate, so it applies primarily to financial institutions, but even recently real estate companies have been designated as reporting entities. And essentially what they have to do is they have to do customer due diligence. So they have to, identify the, both the financial and personal incidents of their customers. They have to report suspicious transactions, and they have to feed information to the financial intelligence unit. So the framework is there. And globally, we see a mobilization towards enforcing the Financial Action Task Force's travel rule, which basically says that, effectively, what it effectively wants is that there should be no cold wallets. So all intermediaries dealing with crypto should have information on both the beneficiary as well as the originator of the transaction. So the appetite, I mean, coming back to political will, the appetite to do the work, I mean, the solutions are there. It's about the appetite to do the work to regularize this. And we know that actors in the market are incentivized to do this or to, have traceable transactions because greater trust in the ecosystem means greater investment for them.
Thank you, Meghna. If we can pick up from there, Bhargavi, I think there's one set of actors that are definitely not incentivized at the moment, which is banks. And we've seen this movie before with FinTech 1.0. And you've written extensively about the tension between FinTech and banking sectors. But also coming back to the context of the Foreign Exchange Management Act, banks are veritable gatekeepers for current account transactions, for instance. So if I want to remit money to you sitting in Singapore, the Lord knows that, my bank can basically create hurdles for me or help me out. It's a very discretionary bank-led compliance architecture in a sense, which is very old world, very paper heavy. So do you see banks adapting to this, or just, what would be the incentive architecture for banks? Because the questions around financial stability are still up in the air. I mean, it's early days, one can argue, and it's, when you're not talking about financial stability linked to other asset classes like gold, where there are multiples, investment in multiples of what we see in crypto today, why talk about this? But central banks are concerning themselves with this question. So just coming back to the incentives for banks and also on the foreign exchange management side, how does this actually play out? Because you'll need banks to be willing participants.
Yeah, thanks, Ivan. So the thing is, let's think about what banks really do, right? So, and how does crypto really interfere with all of that? Banks really take deposits and they lend money out and they pay you, the deposit holder, an interest. Okay, now how can crypto rock this boat? Okay, so the moment a lot of people start seeing cryptocurrencies as asset classes or as investment vehicles, it may lead to them diversifying their portfolio away from a bank. So instead of keeping money in an FD, I'll basically move it to crypto, right? Can banks do anything about that? In my opinion, not. I mean, as more asset classes come about, I mean, today it's crypto. Imagine if the crypto revolution wouldn't have happened. Wouldn't we have pushed Indian investors to take increasing exposure to equity, to bonds? Yes, even those are competing with bank deposits, right? So I don't see that as a very big sort of, let's just call it, I don't see banks be feeling really insecure about that, because I think that they compete with every other asset class. They'll compete with this new asset class. So be it, right? Another reason why banks, I don't think, should feel so insecure is because they know that RBI is traditionally conservative on this. And so, for example, in 2018, RBI issued a circular prohibiting banks from dealing with customers who use their savings account money or current account money for dealing in crypto assets. So I think, number one, they're banking on that sort of implicit guarantee that the regulator will disincentivize this. So, and number two, they think that maybe crypto assets are just another asset class which we need to compete with. In fact, banks may themselves start put money in crypto the moment there is some stability and some theoretical framework for pricing crypto assets, right? The second is, I think the reason why banks will be more affected is because of the efficiencies that crypto payments bring to cross-border payments. Currently, banks make I don't see banks making too much money on domestic payment transactions, but the markup on cross-border payments is significantly high, and the crypto cross-border payment flows actually take away that revenue flow, right? So, but will banks really fight to keep a market share there? I'm not so sure, because I think, like Sudipta mentioned, at least right now, it seems like the only way to get off the crypto world rails is banks, right? So at some point, I will hit a bank to convert my money from payment to you in crypto, and then when you take out the money you convert it back into fiat, again you'll hit the bank rails again. The only thing that can disturb this nice apple cart is if increasing number of businesses start accepting crypto payments as payments for their services and goods, which right now I don't see it happening at a very large scale. So again, that's another reason why I don't see banks being too sort of as against it as a lot of other things.
Thank you. That's a very useful perspective. Yes, Sudipta, I wanted to add to it.
Yeah, see, I'll add a perspective which is, as recent as today or even last week, right? Banks are extremely hungry to support exchanges. They no way perceive these, assets as competition or anything, because if you just talk about the amount of money that will flow through them or the amount of float that they'll enjoy, right? It's huge. And I'm talking about small exchanges also, right? And without naming any banks, I know for sure one of the largest, private sector bank. They, in fact, made a presentation to their CEO, one level down, the treasury team, right, to see how they can enable this asset class and how the bank can support them, right? So I feel that the banks are extremely eager and they want to support this in India. And it's just that, they are little apprehensive of kind of upsetting
The RBI.
yeah. And the other thing that I want to really highlight is, again, I can talk about the largest bank in the US, right, which is JP Morgan. If you look at what JP Morgan is doing, right, through their Onyx platform, and if you look at their roadmap, right, I think they're starting with the product called Link, which actually enables faster cross-border payment. And if you just Google it, State Bank of India, which probably is one of the most conservative banks in India, they actually have joined the blockchain network of JP Morgan, right? So that essentially enables faster remittances to happen through. The first step is how do you verify the account of the user in India, right? So I feel that banks are super eager to work with Web3 companies. And one more aspect that I want to add, Vivan, before I hand over to you, is one of the other things that I am observing is even companies or crypto exchanges, what they are looking at is, one is the entry point that I told you, right, which is accepting or enabling fiat. The other is also the exit, right? So what exchanges want to do is they want to enable a full, let's say, an app or something where you can actually use a virtual credit card like a Visa or a MasterCard to liquidate your let's say investments or whatever investments that you've done in crypto, right? So if I have made some investments, I want to use that payment through a, let's say, a credit card or a card that is issued by a scheme, right? So entry as well as exit, I think banks, there is huge scope for banks and traditional fintechs.
I think a lot of Web 3.0 guys will be heartened by your remarks, Sudipta. And you obviously work with a lot of banks, so you would know, because we only see the negative press around banks' reluctance overall to deal with this ecosystem as a result of the baggage of the RBI circulars and so on and so forth. But if I can turn it over also to Jay, in case there are any questions from the audience, maybe we could bump some of those up. We have about 15 minutes left of this discussion, and the idea is to make this an interactive series. So please, and let's keep in mind the theme of the international dimension. And if there are some questions to that, that will be nice. Jay.
Great, thank you. I want to encourage our members now, if you have a question, to drop it on the chat, or you can raise your hand and we'll capture it that way. While we're waiting for those questions, one of the things that I'm thinking about is a question for, I guess, almost all of the panelists. Financial services is one of the more regulated, but also one of the more internationally coordinated sectors around the planet. And now you have a fairly new, advanced, or maybe it's not so new, not so advanced sort of movement in a different direction. And it seems to me a lot of countries are doing a lot of things, But I'm curious to know how this is being thought about in any sort of coordinated web level. Is it part of any financial conversations that governments have, or if there are any sort of international best practices or organizations that are moving this forward collectively in the same way that many governments collectively have conversations about currency flows and a whole variety of other financial conversations?
I think, Bill, you're best placed to answer that. I just want to mention here that India is going to be hosting G20 next year. This year is the Indonesian presidency. We take it over next year, and line ministries are buzzing with the quest to chart an agenda. And I'm sure that aspects of central bank digital currencies, as well as cryptocurrencies more broadly, will be discussed in the G20 setting. And it has been discussed in the G7 setting for sure. But over to you, Bill, in terms of what else we should be looking out for.
Sure. Yeah, I think the primary coordinating body I think of for international financial regulation is the Financial Stability Board and the working groups that fall beneath that. The Basel Committee on Banking Supervision has produced some research just studying cryptocurrency as an asset class and making some recommendations how it should be risk weighted on financial institutions' balance sheets. IOSCO, which is the organization within the FSB or under the FSB, that's the securities regulators, has also done some research and recommendations to this effect as well. And so this is really the place where developed economies with sophisticated financial regulation can share best practices and make recommendations for global standards. Vivan, you also made an important mention too, something I don't feel like we discussed much today, but we're making great strides on in the US is central bank digital currencies. The Federal Reserve in the U.S. has a white paper they issued a couple months ago and is requesting comment on at this point. But also there is significant discussion in the executive order from the Biden administration on this, well, encouraging the Fed to move forward. And so I think this isn't just important to the U.S. just given the U.S. position as the world's reserve currency. Whether or not the U.S. creates a digital dollar, I think will have some global implications as well.
Yeah, if there are no other questions, I can continue, Jay.
I actually have one other question that I want to sort of tie some of this to another trend line that we're seeing. Obviously, all governments have always been focused on small businesses and startups. In India of late, there has been an increase in the number of startups, but also an increase of government interest in those. Many of those are smaller software, some are gaming, some are content providers. For those of you that are kind of tracking India, I'm curious to know if this startup community has a specific linkage with cryptocurrencies and other sort of digital assets that maybe is new and assertive and perhaps different than just hand me a credit card and I'll go and give me 3 hours of video games. How do those two trend lines interact from an Indian point of view?
So Meghna, Sudipta, anyone like to take that? Meghna, why don't I put you on the spot, and maybe you can talk a little bit about the Web 3.0 startup ecosystem of which you were a part at some stage, and really, who are the actors? What does it look like? What is the enthusiasm, momentum in that space?
Yeah, so there's a significant amount of momentum in the Web 3.0 startup ecosystem in India. We have 3 unicorns already. The only, I guess, concern for them is the regulatory uncertainty that still, persists. And as a consequence, we've seen several of these startups move their headquarters abroad. So Jacob, in terms of what you were saying, whether crypto presents some kind of economic imperative to the startup ecosystem in general, I think definitely in terms of, either initial exchange offerings or initial coin offerings. And we've seen, in fact, the example of one Indian startup, Polygon, which carried out after raising some initial funds from friends and family, an initial exchange offering, which basically means that the exchange vets the token that's being offered on Binance, which is a global exchange, and they raised $5 million from that. And so I think, startups that are looking for easy capital will move to this space, or not easy capital, but, relatively friction-free capital will move to this space, or look to this space for that. And I think that there's uh, quite a strong synergy over there. But in terms of crypto startups per se, it's a very active space, and we've seen a lot of students developing successful startups over here. But the problem is regulatory uncertainty, and until they do not have that certainty, they will migrate to quarters where laws and frameworks are friendlier to them. And I think that is something that the government should consider.
I'd actually like to follow up on that, Vivaan. Just give me, you said that because of regulatory uncertainty that you know of a couple of Indian startups that have moved. Is there, where are they going? Are they just sort of going elsewhere, or is they all going to Singapore, or they're all going to Singapore? Singapore.
And Dubai as well. Yeah.
Singapore and Dubai. Thank you. Very good. Over to you.
In fact, Dubai has a new law in the works. I don't know if it's been issued yet, but they plan to create a regulator that is crypto specific. I think they want to call it the Virtual Assets Regulatory Authority. So crypto, NFTs, etc. Which is interesting. We see a lot of movement towards Dubai from India, and it's one of those things in the IT sector, you want to make sure the entrepreneurs feel nurtured and feel like they belong, and I think it's very important therefore for India to also generate that political will to push something through to give them that certainty. But just as last sort of takeaways from Bhargavi and Sudipta, if I can ask Bhargavi, is there anything that Singapore is doing fundamentally right, aside from just being a nice, safe city to live in? Why are Indian entrepreneurs going to Singapore or structuring out of there fundamentally? And Sudipta, I want to come to you after that with your last sort of annotations on compliance technologies and just unbundling the ecosystem around payments and exchange and so on and so forth. But first to you, Bhargavi, why Singapore? What is it doing right?
Yeah, so I think Singapore is definitely seeing a pretty good uptake on cryptocurrencies as an Asian hub. And I think primarily that is precisely the reason which Meghna mentioned, which is that there has been a lot of regulatory certainty in Singapore on the legal status of cryptocurrency and crypto assets. So since 2017, in fact, I would say the government and the Monetary Authority of Singapore has in fact been encouraging it until very recently. So in 2022 and 2021, we saw a couple of warnings, warning the general public about the volatility in these assets. And in 2022, just a few days ago, in fact, the MAS came out with a pretty strict warning asking service providers in the cryptocurrency space to not market their products directly to the general public. So no putting up of ATMs, no displaying ads on buses and stuff like that. And so that, in my opinion, will have some adverse effect. But otherwise, largely, they are very clear how they want to regulate this space. And I think that really helps.
Yeah. And we see sitting out of India, this trend towards responsible innovation, responsible business, responsible advertising as being really the defining feature of the next decade of entrepreneurship around tech. And I think the sooner companies get around to meaningful discussions on that, the better for them. And I expect us to have discussions around other emerging tech sectors like gaming, where this has become quite a theme of late, but also artificial intelligence and so on, where we hope to deep dive into what India is doing around this theme, what the industry is doing, what we expect to do, and so on. But before we leave you, Sudipta, just in terms of, again, linking to Jay's proposition slightly, the startup ecosystem, but also to looking at the sort of matrix of service providers that the crypto ecosystem is in, itself sort of catalyzing. What are some of the exciting trends there? PayU has been making acquisitions. Other major payments companies, fintech companies have been sort of acquiring many of these smaller niche startups. So where do you see, what are the sort of trends that you see as this space sort of unbundles and then rebundles and so on and so forth?
Yeah, see, one aspect that I want to highlight, right, as to whatever, we see or read, right, that companies moving out of India or whatever. But if you look at the amount of employment or the amount of jobs that are open, right, especially in Bangalore and Delhi, it's immense, right? And if you look at any American crypto, including Coinbase, including Binance, everybody's hiring in India, right? Either for their engineering team or for the business team, right? And coming back to the Singapore part, right? I agree that Singapore might be more open, but I mean, I'm just putting a perspective. Out of 400 applicants in Singapore, uh, just 4 exchanges got approved last year, right? So they are also, MAS is extremely strict in terms of approving. So while there are aspirations for exchanges to open in Singapore, but there have hardly been any approvals. I mean, just 4 out of 400 is like immense, right? So yeah, I think one aspect is right that India companies are moving out of India, but the amount of employment that is being generated or has the potential, I think, is immense, right? So the headquarters might not be India, but you can trust me that at least 80-90% of the people of a company would be in India.
Right. Thank you, Sudipta. And I think we needed a dose of optimism to end this conversation and really create impetus for this series as a whole. And thank you, everyone else, for your deep insights on this. I hope this was meaningful to those of you who were able to join us today. And thank you, Jay, for this opportunity.
Great. And on a final note, let me just thank all the panelists. You have a great webinar when you're listening intently and you look at the watch, and we actually ran out of time. So really phenomenal conversation, lots to learn, lots to look forward, and hopefully we can bring you back onto the platform to have follow-on conversations. For any of our members on this call or others that wish to talk with the panelists, please do not hesitate to reach out to me with an email. And also, I want you all to look forward to other technologies that we are going to cover quarterly. The idea is that we bring a new technology forward to understand about the technology and understand the implications. And I want to thank Vivan in particular for pulling together the actual discussion and the speakers, and I look forward to working with you, sir, in the future. With that, I also want to thank Bill Holtz from the U.S. Chamber of Commerce. Bill, for your insights, and feel free to think about India as you think about your programs and interactions going forward. And of course, let me wish our members and participants a wonderful morning and a nice evening as well, wherever you are dialing in. With that, thank you again and have a great day and stay safe.
Thank you.